Hi, Joan. Can you see my screen?
Yep.
Okay, hold on. Which one is it? The PowerPoint?
Mm-hmm.
Okay. All right. So I had to open and close it a couple times because it was stuck. I think we've got it. Sherry's. Yes.
You're missing Lori's last slide.
Oh shit. Right. Get that now.
And your slide should be above the rendering slide.
I hear I'm going to make you co-host. So only let Sherry and Lori in, okay?
Yeah.
Everybody else can wait.
Hi, Lori. You're on mute.
Hi, how are you?
Hi. Good.
Good.
We're just dropping your last slide in and reorganizing the last few slides here.
Okay, great.
Some
Nothing
technical difficulties.
Nothing like the last minute, eh? That's how we roll. We get her done.
Not how I wanted to do this today.
No, I know. Well, this is the hard part because once we get this done, it should be easier. Hi, Sherry.
Hello. Got my offer accepted.
Oh, cool. And that's Lori's last slide.
And then you just, need to move yours up.
Oh.
There we go. And then what does the last slide say? Okay. And then the very last one?
That's it. I couldn't, that's the very last one.
You had another one in the line.
Yeah, I did, but now I can't find it.
There it is, right there.
Just like, where did it go?
Mm-hmm. Perfect.
Okay, can you just go back up to Lori's slide? It looks wonky.
Yeah, the bottom of it, I did cut and paste it from Excel. Like if you go onto the slide itself, Liza. No. Oh, maybe.
Well, I mean, one of the things that you could do is just put in a slide or just say after this last picture, that you're expecting to make X.
Yeah, I would do that because this is too.
I don't think you need to get this detailed on it.
Yeah, it's a lot.
I would just say you're expecting to make around $55,000 profit.
Okay. Yeah, delete it.
Yeah.
Okay.
Projected profit is 55K. Yeah.
Shit, how many did I delete there?
You just need to delete 27.
Okay, hold on. I got to go back to the right slide. So this one. Okay. All right. So from the beginning.
You want to put it in the proper view?
Yeah, give me a minute here. I'm just not used to driving. How's that look?
No, it's not the right view.
No, it's not. You're right.
Just put it in a regular slideshow view.
Yeah, I'm working on it. I haven't used PowerPoint in a while. I'm looking for, where's the PowerPoint slide view?
Slideshow up top. See slideshow up top?
Yes, thank you. I was looking for the quick thing on the bottom.
And then from beginning.
Okay, is that it?
Yeah. No, it's not coming up properly. Try display settings, full screen. It should be. No. There we go.
There. Yeah.
Okay, I'm not going to touch anything.
Don't
So
touch
we'll
anything.
just go through. How are we doing for time? Okay, we've got about,
We have 5 minutes.
okay, 4 women. Is that a duplicate there?
Nope.
Okay. Oh, and you're taking over from here?
Yeah.
Okay, got all this.
Yeah.
And then you want me to take back over from here?
Yeah.
Okay, talk about this. Then Sherry,
Yeah.
Yeah.
and then
And then
Lori. Okay, Lori Finnegan. Great. Okay, I'm gonna do that. I'm gonna do really quickly my active one. I'll just talk to it really quickly and say, but we'll save that for the book and then we'll wrap up. Who
And
wants
then
to wrap
ask for
up?
questions.
And this will be for Sherry.
Sherry, you want to wrap up?
Yeah, okay.
Okay, who's gonna do the, who's gonna let people in and who's running the slideshow?
Joan's on, since I've got my share screen up, I'll run the slideshow.
And I got
Joan,
the waiting room.
You've got the waiting room, so we might as well,
Yeah,
Take
and
a
also
deep
kind of
breath.
just look at your chat as well. Park
Yeah.
chat somewhere.
I can manage the chat.
I just have people write questions in the chat and it'll be okay, guys. These look pretty
Okay.
cool. That looks really nice.
I know, hey?
I love it.
Jeff did such a nice job. Am I bright enough? Am I okay? You guys all look,
You
Yeah.
look cloudy again.
do I? Okay, well, I'll have to figure out what's going on with my computer, but that's not going to be able to change that. So,
You have to stop spitting, Liza.
all right. So we're going to put spotlights on everyone. So whoever's talking will get the spotlight. And keep your phones close by, just in case anybody has any trouble coming in. I'm not quite sure how people are going to message us, but they did have to register. So hopefully they've got the info.
Okay.
And if anything goes wonky, just text me or send me a chat.
Thanks, Liza.
All right, Joan, let them in.
Let him in?
Mhm.
Okay.
Sherry, can you fix your light a little bit? You're very hot.
There,
That's better. Yes.
Better?
Yes.
I can't see myself on the screen. Oh, there I am.
We've
Okay.
got 12 people in.
Okay,
Woo.
you admitting them all?
Hi, everybody.
Hello.
All right.
Howdy.
We're letting people in. Here you come. Come on in. Come into our little Zoom room.
Zoom room.
Zoomy Zoom. Gosh, isn't it going to be great to get together in actual person at some point in the near future? Whenever that might be.
That means we have
That'd
to
be
get
nice.
fully dressed.
Yeah, right. None of us are wearing pants on our bottoms anymore, right?
Oh, dear.
We've all got nice tops, but everybody's got like worn out sweatpants.
I
Their
do
bottom
not,
half.
just for the record.
Yeah.
I was not aware this was a porno site.
Yeah, I know. It's like, okay.
So we'll just give everybody a couple minutes to come in and join us. We've got lots of people who are popping on. It was great. Lots of people registered tonight. It seems like we are talking about a hot topic, whether or not to wear pants. No, our hot topic tonight, we're going to be talking about active and passive real estate investing. And yes, we've had lots of people asking about that. So there we go. We'll just give everyone another moment to jump in. If you are joining us and you want to say hi, if you're on Zoom, please feel free to pop into the chat and introduce yourself. We'll pop in there in a couple minutes and have a little look and see where you're from. It'll be interesting to see if it's mostly West Coasters tonight or if we've got, I think we might have a couple of Torontonians on board, so that'll be fun. And we will record this. Let me just make sure that we are recording. Yeah, we'll record this so that we can edit it and let people see it if they need to see it. So how are we doing for time? All right, we've probably got lots of people in. Shall we give it one more minute and then get started?
Yeah, we've got 21 people in, so let's give it just another minute.
Another minute, okay.
Uh,
And it seems like no one's had trouble getting in this time. I'm just going to do a quick check and see if there's anybody who's having difficulty. Looks like
Well,
we're okay.
while we're waiting for people, I'll just
Yeah.
say something quick. So I just want to say how thankful I am today for Zoom and technology. If we had had this pandemic even 10 years ago, I don't know what would have happened. It would have made it even harder. So although we aren't seeing each other in person right now, it's still a heck of a lot better than what it could have been. So
Very
I'm-
true.
yeah,
Yes,
I'm really thankful that it's been
absolutely.
able to
Yeah.
allow people, family, businesses, whatever, to keep going. So, you know, it's kind of the silver lining because we didn't really have this years ago.
Yeah, yes, it's so, and it is so nice to be able to connect with people from all across Canada, right? It's fantastic to be able to do that. So, hey,
Yeah.
Sherry, your brother's here.
Is he?
Yeah, he's just jumping in.
There you go. He is too. Hello,
Yeah,
brother.
yeah. So some of you were seeing our little, our new logo and colors for the first time. So we've gone with some black and gold. It's looking pretty good. We'll have the website up in a couple days. It's actually up now, but we're just making some tweaks to it. So when you want to know
Yeah.
a little bit more about us, you can find it. All right.
Okay,
Okay.
we've got 24 in the house, so we might as
Okay.
well get started.
Get going.
Let's get started. So for those of you who are joining us for the first time, please feel free to introduce yourselves in the chat. If you have never used Zoom before, you should see a screen on the bottom or right side of your screen, and you can pop into what's called the chat. You can ask us questions in there. If you have a burning question, just pop it in there. We'll have some time for Q&A at the end, and we'll have opportunities. If there's not too many people on, we can unmute and people can kind of just jump in. But we've got lots to go through, so we're going to get started. So hi, everyone. Nice to see you. My name is Liza Rogers, and I'm one of the partners with Crown Capital Properties. We are also joined by our three lovely partners tonight. So Joan Probert, and Joan's going to talk about our passive and active investing. Lori Finnegan. Lori's going to share with us some of her active real estate ventures that she's been part of. And of course, Sherry Kraus, who is our managing director, who's going to share with us some details on some of the buildings that she's completed in Langford. So let's jump in and see if we can get this little slideshow happening. Here we go. So as I mentioned, active versus passive investing, which is what we are talking about tonight. So investment conversations that we can all understand. So we wanted to keep this simple. We wanted to talk about this because lots of people have been asking us to have this conversation. What is passive investing? What is active investing? Why do I need to know what the difference is and how do I get started? So we're going to talk about some of these things tonight, and hopefully by the end of our conversation, you might know what type of investor you are. We'll give you a couple of samples of what we've done, and you might go running for the hills as an active investor, or you might decide that you really do want to pick up a hammer. So we'll see where we end up. So the burning question, how do you make money in real estate? Once you know this, it all starts to fall into place. So a couple things, I know there's probably some KeySpire people on board, and there's lots of people who are familiar with REN and with REAG. And so we talk a lot about these little points that we've got on the screen here. So what is real estate all about? It's about generating cash flow. It's about forcing appreciation. So that's doing some renovations so that you can take something that kind of looks like the worst house on the block and make it nice and add value to it. Market appreciation. So of course, in cities like Vancouver and Victoria and Toronto, the market has just been getting stronger year over year. And so we've seen returns of anywhere from 10 to 15 to 20%, sometimes annually. And so there's market appreciation that happens. Mortgage pay down, which is something that a lot of people forget to calculate, is, you know, you're paying down a mortgage, and if you've got tenants in your building that are paying down your mortgage, well, that's even better. So that's all helps with the investment. And of course, passive returns. Who doesn't want passive returns? We all want passive returns, and in some ways they're really easy to do if you decide to just dive in and go straight to passive. But sometimes you've got to work your way towards passive returns by doing some active stuff first. So that's just a little bit of a background on what it takes to generate. Any ladies, you want to add anything to those points before we dive in?
No, I'm good.
No,
I'm good.
All right. Okay, I'll keep going. I think, yeah, we're almost there. As 4 women interested in active and real estate investing, we wanted to share our knowledge and experience with you. And we're really happy that we've got the guys here tonight too. You know, one of the things with having 4 women is we don't want to frighten away the men. The guys are welcome. And so it might just be a little bit of a difference to see 4 women running a development company, and that doesn't mean that the guys aren't welcome. So we want to share our knowledge with you, talk about it from the perspective that we have, and we just happen to be women on this. So here we go. That's fun. All right, so Joan, I'm going to turn it over to you to share with us active and passive investments.
Great. Thank you, Liza. I'm going to pass back the waiting room to you just in case anybody else comes in. But we've got 28 people now, which is fantastic. So lots of interest in the topic of active versus passive. So hopefully we will answer as many as your burning questions about the difference between these two things and show you those real life examples. Passive investing is really ideal for someone like myself who really doesn't have the time or the ability. I have the expertise and the interest, but it really is difficult if you maintain a full-time job to actively invest and manage it. So we'll get into some examples and some pros and cons of both. So I'm a bit more of a passive investor. So I go for the investment that doesn't take me a lot of time. The active investment is something that you really need to be available for and have the time to do. The one difference with active versus passive, and again, we'll get into some more details about this. In the active environment, you have total control over your investment. So if that's what you want, it's perfect for you. If you'd like just to put your money in something and sit back and let somebody do all the rest of the work, then a passive investor you are. So Liza, if you move on to the next screen, we'll get into the details of each. We've got a couple of categories that people think about when they're investing. And one of the biggest ones, and the first one we talk about, is the risk you take. So in the active category, you pretty much take all the risk. So when you're buying an active property, an active investment property, you're using your own equity, most likely. So that could mean you're using line of credit, you're using available cash that you have, whatever it may be, you're tying up your equity for that. If anything goes wrong, and if there is any loss in the deal, you suffer the 100% effects of that. And once you get into active investing, substantially active investing, you start to limit the number of properties that you can purchase on your own. And for any of you who haven't had any exposure to this, you kind of hit this magical 5 property number, and then it becomes really, really difficult to start getting mortgages again on additional properties. So that's some of the things to think about for risk. Risk in the passive world, you have much less risk, and you have more opportunity for your profit to be maximized because you are really investing your money in with an expert in a passive environment that's going to be managing that investment for you. So there's a lot less downside to you taking any losses for that because it's less likely that that could happen. And there are also usually larger scale, either private equity, investment funds, building developments like ours. So they spread your risk quite more substantially. And you're part of a bigger real estate investment fund, diversifies your overall portfolio. So, oops, of course my phone would ring right now. So you spread your risk a little bit because you don't have all your eggs in one basket. So if all your eggs are in an active investment or a couple of active investments, and say the market goes down in your particular area, you could find yourself getting losses across your entire portfolio. So passive investment helps balance that out. So if you like the active investing, passive also helps. If you add some of that to your portfolio, just level out your risk a little bit.
Joan, just before we jump on to the next slide, if I can just make sure that everybody is muted, just because there might be a little bit of an echo. I think there might be 1 or 2 people who are not muted. So don't worry, we'll have a chance for everyone to chime in, but just check and see that you are muted. And I will mute myself. And Joan, you want me to go to the next slide?
Yes, please. So the next consideration is the asset itself. So in an active purchase, or what we would refer to as an asset in an active investing strategy, might be a property, might be a home, might be an apartment, might be a duplex, but physical hard asset is what we're talking about in the active world. And if for any of you who are actively looking in the market right now, you know that finding a property, it takes a lot of time and energy. And in the current market environment, you need to be really prepared to move quickly, or you're going to lose the opportunity to purchase that asset. I'm sure Sherry could tell you many stories about what's going on right now in the market with multiple offers, but we seem to be back in that world of, if you're not ready to pull the trigger, you're not in the game. So you need to be prepared and have the time and the resources to be able to move very quickly. And if you're not in a market where it is that active, you really have to know your stuff and digging through your deals, and you need to be able to do all of your due diligence related to that purchase, which is the next point there. There is a lot of due diligence related to any purchase, especially if you're buying any type of land or a building. For those of you who haven't been through the due diligence process, there's phase 1 environmentals, there's a whole bunch of different things depending on what you would want to do with that land. If you would just want to buy a house and not take the risk of doing any due diligence, it may really, really bite you in the butt somewhere down the road if you decide to sell that property and you find out you didn't know that there was an oil tank buried on it, for example. So those are kind of some of the things that you need to think about with an active purchase of an asset. In the passive world, you're not purchasing an asset, you're investing in a group of assets potentially, or a group of funds potentially, and you're dealing with a professional in that. So you've got somebody who already has a proven acquisition process in place. So they are kind of on the cutting edge of, or on the knife's edge of being able to resource these properties quickly, and they often know things that the general public doesn't know in regards to which properties may be coming up or whatnot, because they're in the game. So they're very actively in the game. So your passive investment there is a lot less risk around the asset itself, or a lot less work getting involved in that asset. Next one, please, Liza. Financing, I touched on this a little bit in the risk slide. You need to find the capital. So if you're an active investor, you need to find the capital, and you got to be responsible for securing the mortgage. And like I referenced earlier, you kind of max out at a point where you can no longer qualify for mortgages anymore. And that is kind of a stumbling block for many investors, because they don't lay the groundwork in the beginning to know how to overcome that hurdle when they get to it. And then they can find themselves a little landlocked, like they can't move anywhere with that unless they start liquidating properties and pooling funds. So that can become a challenge. But you know, if you do it right from the beginning, you can certainly keep that ball rolling for yourself. You just need to know what those strategies are. So a little bit of homework. In the passive environment, you don't qualify for a mortgage, and you don't put any of your personal assets at risk to invest. So you really have nothing to risk except the investment that you put in there. So you don't tie up your qualifying ability, and you don't tie up any liens or ties to your personal assets, which many investors like to do. So again, if you invest both actively and passively, you really help spread that risk out by one outweighing the other, depending on what's going on. Next one, please, Liza. And the last one, and I've touched on this already, it's time. And you really have to think about your time and what time you have to dedicate to this. When I first got into the investing training world like 6 years ago, I thought I wanted to own an apartment building. Like I just wanted, that was it. I wanted to own an apartment building and I wanted to be the landlord over that apartment building. And my coach at the time said to me, he's like, wow, are you sure you want to do that? Because you have a lot of commercial leasing experience. And when you own an apartment building, he's like, every time that toilet, you got 10 units, just say, because that's what I was looking at the time. Every time that toilet plugs or a light bulb's burnt out or you know, whatever it could be a million different things. A tub is plugged, a hot water tank doesn't work, you know, blinds are broken, that all calls to you, right? So all of the responsibility for the maintenance of the property and also compliance, which is a lot of people forget about their legal compliance, so that you have working smoke detectors and you've done fire inspections and you've ensured that the electrical is safe in the building. You really are taking on a lot of the compliance and responsibility. And I think a lot of active investors sometimes forget about that. You are liable for the people that you put in there and ensuring that they have safety. And so long and short is that you deal with everything. And my coach at the time said, you know, with your commercial investing experience, why wouldn't you just look at commercial with a triple net lease? You're not responsible for anything. You just own the building and the four walls in between. And I was like, wow, that makes a great deal of sense. And I hadn't really contemplated that before. But as I continued to grow in my experience, I decided that even that was not what I wanted to do. So again, I'm a little bit more, I lean to the passive. I want to sit back and let the professionals do the work for me because I work full time. I just really want my money to make me money. I want money that I have sitting in my bank or sitting on my line of credit that's doing nothing for me right now, make money for me without me having to do much with it. I'm invested in a lot of private equity funds myself. And this last point here in the passive, I get cash payouts or dividend checks, and I just continually roll them over and reinvest them in the fund for a compounded effect. So in one of my private equity accounts, I get what they call a drip, which is like it's like an automatic drip that keeps going into your account every month. It's a set rate. And then in another one, I get like dividend checks that are paid to me quarterly. And then all of your returns are calculated on what the total of that is. So that's a little bit about time and your investment, the time around what your money is doing for you as well. And that's it for that, Liza.
That was great. Thanks, Joan. Sherry, do you want to add anything to what Joan was saying, or? Oh, you're muted.
You're muted, Sherry.
There you go. You're unmuted now.
Oh, sorry. Yeah,
That's okay.
I'm used to being unmuted. But anyway, no, I won't add now. I'll talk when my turn comes.
Okay, cool. So hold on to those thoughts, everyone. We've got a few more slides to go. All right, so here we just wanted to say passive investing in real estate, perhaps better than money in the bank. So as Joan has been alluding to, lots of passive investment opportunity. She's investing in private equity market and exempt funds and likes just getting the money in, and your returns are probably a little bit better than if they were in the bank, I would imagine. So
yeah, I'm seeing returns from, you know, anywhere from 8 to 12% for doing absolutely nothing except looking at it every month.
Awesome. So we wanted to just put some numbers together for you so you could see, you know, very easily what this looks like. So what we've done here is just put a couple of slides up with some numbers on. So let me just give you some samples here. So 50K is a fairly reasonable investment for a passive investor in a real estate product. So say you've got $50,000 and you leave it in the bank at 2% for 3 years. which a lot of people are doing. I actually spoke to, I'm not going to say anything, but I have spoken to a couple people recently who have a lot of money sitting in the bank earning this interest. So, and they scratch their heads and go, I know, I gotta stop it. I gotta stop it. So $50,000, simple interest. We just kept this very simple for purposes of review. 3 years, 2%, you're going to get $3,000. So yeah, it sounds not too bad, but let's go to the next example. So 50K for 3 years at 8%. And as Joan was mentioning, 8% is kind of a typical exempt market return. It's also, if you are in the private lending field or arena and you're thinking of doing private lending for real estate investors, 8% is a very typical rate for private lenders. So you can lend your money out and work out the details. Do the due diligence and possibly get 8%. So again, this is a very simple calculation. If you're doing private lending, you're charging fees for putting the paperwork together as well. So there's lots more to do. But you know, here's your same $50,000, and now all of a sudden your return is $12,000, and you've got $62,000 in your pocket. So again, just wanted to illustrate that. Now here. Here's where we look at a 50K return, 3 years at 15%. And so a lot of you, again, you're familiar with WREN, you're familiar with Western Wealth Capital, you're familiar with Sherry and Rick's products that they've had in Langford. You know that these kinds of returns are possible, and we're not saying that this is to be expected, but there are opportunities to earn these kinds of returns in real estate annually. So again, we're talking about, here's a $50,000, 3 years at 15%, and you're going to earn something like $22,500, and so now you've got a total of $72,500. So it's always nice just to have a couple of numbers to look at. So we just thought we would put that in there for you to give you a little bit of an overview. And so with that, I'm going to turn it over to Sherry, and Sherry is going to tell us about her buildings that she has done and the returns that they paid. So take it away, Sherry.
Okay, so I'm just going to talk tonight. I mean, it's quite obvious if people don't know, I'll tell them. I am an active investor. I know very much that I'm an active investor, and I like getting in the trenches and doing all that stuff. So a few years ago, I got into development, which was different. Prior to that, I just owned single doors or houses with suites, duplexes, that sort of thing, and got into apartment buildings, but I was building new. So what I was looking for was, because I didn't have all the money, so some people do joint ventures, I decided to do a passive income offering to investors, friends and family started out. And so basically, this was the first building that we built in Langford, BC, and we opened November 2015. We got investors in, passive investors, and basically what we were offering them was a 10% rate of return per annum for the time that we had their money. So that we just paid them right out of the gate. They knew that they were going to get 10%. And back in 2014, when we were raising this money, that was quite happy for a lot of those people. So we did pay them the 10% per annum. So they were passive investors. They didn't have a lot of say. Well, they didn't have any say, really. We went ahead. We were the active ones. We were the ones whose name was on the mortgage, who had to sign our personal guarantees and everything else. And like Joan had mentioned, from a risk point of view, the only thing that the investor, who is a passive investor, is putting at risk is the capital they're putting in. They're usually not putting their other assets on the line like an active investor is. Next slide, we move to number 2. So this is Robert's Place. We did this one after the first one, and we opened in May of 2017. It was 30 units. And again, we did exactly the same thing, 10% rate of return. This time it was 19 months instead of 18, but we were able to pay everybody out and investors were happy. And just like Joan had said, a lot of people just took their money from that investment and rolled it into the next one because they were content with what we had done. and what they were getting. So they were happy with that. But we started to get questions, and we started to get people asking us, hey, you know, it's nice. We don't mind the 10% because we're sure that we know what we're getting. But wouldn't it be nice to have something where we were actually participating in the equity that, you know, that was coming up? So we looked at developing a third property. But before I move on to the third one, just want to make a final note. These first two buildings were sold in June of 2019 to a REIT. We sold them together as a REIT, those 50 units. So then we went on to the third one, listening to people wanting an equity stake. So we did, next slide, Hockley Corners. And this we opened in August of 2019. It was 63 units. We sold this one too a year ago. It's hard to believe it's a year already. But anyway, we had offered a equity stake. So what we did was we said we're going to give investors a certain percentage of the deal, certain percentage of the profit, and a certain percentage of the rent that we got for the time that we collected rent. So they participated, and when everything was said and done and everything was paid out and everything, the investors were receiving a 56% over 30 months. So it worked out to be about 19% per year on average. So that's sort of what we did with that. And so what I would like to say about this, although it's a passive investment for the investors, and that's why it's, you know, if that kind of investment suits you, this was what we did. But all of the ways that you earn money in real estate happen when you're a passive investor. And sometimes you don't think about that. But as a passive investor, you usually participate in cash flow, right? You participate in mortgage down pay or mortgage pay down, because as the mortgage is being paid down on these buildings, it means that subsequently when you sell, there's more equity. So if you're in an equity stake, you're going to get more money back, right? It increases your rate of return. And all of those things that were on that first slide, or the earlier slide that laid out how do you earn money in real estate, all of those things apply when you are in a passive investment that's being run by an active investor, and it's a property that's producing money and doing all of those things. You get the appreciation in the market, you get everything will affect your rate of return at the end. So I just wanted to bring that in, that passive investing does not exclude a lot of the ways that money is earned when you are active. It just means that you're not having to worry about it day to day. You just wait and get your check at the end. Next slide. And I think I'm done.
I think the next one is going to be for Lori.
Yeah.
So let's thanks, Sherry. That was that's awesome. And just to note as well, a number of Sherry's past investors are on tonight. And I know that they loved getting that check with the 56% return on investment, because they told me how much they loved getting it. So way to go. Wins for everybody. We love it when everybody wins. Exactly. So Lori Finnegan is going to tell us about her active investing. Take it away, Lori.
Hi, good evening, everybody. Like Sherry, I'm certainly more of an active investor. I've been investing in real estate for about 10 years now, and my goal was to become a full-time real estate investor. So I have been striving for that and been able to set aside the time to be able to dive into it. So currently, my husband and I own 4 income properties. 3 of those are in Alberta, 1 in Surrey that I joint venture with my sister on. And we also were involved in a property just in Victoria where we did a conversion. We converted our single family dwelling into a duplex. And then we've also got a fix and flip. So I'll share those with you as we go through the slides here. You can go ahead, Liza. This is a property that I own with my sister, and it was quite an interesting opportunity. We were able to get seller financing on this project. So we only had to come up with $10,000 as a down payment, and the seller was going to finance us for 5 years. So it's one of by far our best investments I've made. You can see the numbers here. We actually furnished the property so we could increase our rents. We've had 0 vacancies over 8 years. It's self-managed. My sister, who lives 5 minutes from the property in Surrey, is able to pop by if there's any issues that need dealing with. Our rents are $13.75, and you see the numbers there. Our positive cash flow is about $270 a month. You know, one of our big whys right with this property is my sister's raising her grandson Cohen. So hi to Tracy and Cohen if you're watching. And you know, part of the cash flow is going towards his education fund. So this has been an amazing property. We've really lucked out with this one. And I will say they're not all this way, and I'll share one with you in a minute here. So you can go ahead, Liza. So this one, not so lucky. This is a property I bought in Lloydminster, Alberta. You'll see the purchase price of $185. Had to put up the down payment of 20%. We started off with rents of about $1,400 a month, but when the Alberta market turned and oil dropped, vacancy rates skyrocketed in Lloydminster, and we had to lower our rents and also just deal with a lot of vacancies. We also had a special assessment on this property, so you see that our negative cash flow is $400. Thankfully, I joint ventured with someone on this one, and I'm sharing this loss. He might be on this call, so he's probably crying at the moment. So sorry about that, David. But yes, it's you know, they're not all wins, and this is something you, as an active investor, you're gonna experience. Or sometimes it's you know, bad timing. The markets shift on you like this did with us, and you know, our goal long term is to hold this. It's a long term buy and hold for us. So you know, we hope that eventually the markets will turn, our mortgage will be paid down by our tenants, and we'll be able to potentially sell it at a profit down the road. Next slide, Liza. So this is one of the properties that my husband and I purchased about 4 years ago in Victoria on Agnes Street, and it was zoned for a duplex. So it's a single family dwelling that we purchased, and we partnered with a builder on this one, where the builder came in and made an offer on the land value of where we'd be building the duplex. And so the builder came in and built the home. They paid for it. And at the end of it, they paid us for the value of the land. So you'll see there that we put about $120,000 in rentals to the property originally. The sale price when we sold it was about $715,000, which included our fees and our legal and realtor fees. And then the value of the land was about $168,000. So our profit on this one was about $173,000. So that was a nice win for us, certainly. Next slide, Liza. That's the before and after. So you'll just see that they just basically built a house, attached them at the walls, and built a house right beside it. So it went from a single family dwelling into a duplex. This is the current property that we have ventured into, which is, it's a triplex. I don't have it all on one picture, but picture those all three side by side attached. Ours is the middle property. We just recently purchased this. And our goal here is to fix and flip it. So we've partnered with a builder who is handling all the build costs at the moment. He's doing the renovations. And the objective here is to sell it at a profit. So our bigger picture plan will be to put it on the market likely in February. And if all goes well, we should make $50,000 to $60,000 profit on that. So if you want to go ahead, Liza, we can show some of the slides on the inside. This is the existing front room here. We're taking out the wood stove, as you see on the right. The stove has come out, and we're starting the renos now. Next slide, Liza. This is the kitchen, and you can see that they have the laundry room in the kitchen, which isn't quite ideal. So we're moving the laundry room into the storage room near the front hallway by the bathroom. So that's going to be changed, and we're going to be opening up the wall. You'll see that in the next slide, going into the front room. So where the outline is, where the tape, that wall's coming, we're extending that and taking out the wall by where the fridge is. And this will probably, again, the renovation costs will run us about 50,000. And time frame again, hopefully we'll have it on the market in February. Go ahead, Liza. So I will add, with all of this, we have now maxed out our 5 properties, as Joan talked about. So we, as active investors, have reached our limit with mortgages and also financing. So you know, when having to put up a 20% down deposit, your capital goes quite quickly. So as an active investor, you need to have access to capital at all times. You need to have a really solid team in place. So, you know, we've got great lawyers, you know, inspectors, appraisers, realtors. Thank you, Sherry. We've can't forget you. We've got, you know, a whole team of professionals in place to help us with as being an active investor. You know, you also want to make sure you have access to capital when you run out, to have your private money lenders out there. I know myself, I certainly have a higher risk tolerance, so I am able to take on these kind of jobs, and I also have the time, as I am doing this full time. So for myself, this is a good fit for me, and that's where I think you need to really look at, you know, the time and the team and the financing you have in place right now, and determine what route is best for you between active and passive investing. On that note, I'll pass it back to you, Liza. Thank you.
I'm just going to interject quickly. I noticed that there was talk in the chatter, so I'm hoping that everybody found the slides. It seems like they did. And just to remind people that we will answer your questions, so stick around. We're not ignoring you. We're just going to finish the presentation and then we'll answer the questions.
Thanks, Sherry. And yeah, I've got one slide. I'm going to do just one slide real quick. You know, for me, I started out active investing. We call it Liza style, throw it all at the wall and see what happens. So for me, you know, those of you who know about my my six bedroom half duplex in Victoria, in Vic West, I decided to buy a property that was quirky, which they say you should never do for your first investment. We wanted an Airbnb, you know, partly because my background is in tourism and hospitality, and as a single person, I love having the United Nations around me, and so, you know, why not do Airbnb as well? And, you know, just to make things a little bit more special, I wanted to make sure that we included business partners and owners who had never done anything before. So I'm going to save the story for the new year, but, you know, think about renovations, nightmare neighbors, rule changes by the municipality, and so much more. And you start to get an idea about how my active investment. It was very active. It was pretty much full-time, managing a guest house, managing new partners, being at the city and arguing with people about Airbnb and all kinds of fun stuff. So in the end, we did end up selling the property. We bought it for a really good price just before Victoria really came into its kind of present day market. We bought while the market was still a little bit flat. So we picked up this giant 6-bedroom half duplex for $495,000, put about $70,000 of renovations into it, and sold it for $720,000. And we did it with 5% down, so our return on investment was very good, but it was a lot of work, you know, more work than any of us wanted to be involved in, and that was a big learning curve for all of us. You know, my partners really thought that they wanted to be active investors and realized very quickly that they actually didn't want to be active investors. So as I say, this one's a nice, long, fun story. I'll save it for the new year and we'll talk about Airbnb as well.
Liza, can I just jump in? Allison said you should write a book about your adventures.
Yes, I know. I'm going to, and in fact, I am writing a book. So we will have a book in the new year, and it's going to be stories from across Canada from women who have succeeded in real estate, and a couple of the authors are probably on this call right now. So Sherry's contributing to the book, yeah, you'll hear more about that coming up. So let's just jump over to our next slide here. and tell you a little bit about what we're doing together as Crown Capital Properties. So you're starting to hear us talk about ourselves, Sherry, Liza, Lori, and Joan as the Crown Capital Properties women. And we are getting ready. We've got our fourplex that we bought this summer in Esquimalt. We're going to build a 20-unit purpose-built rental. We've chosen Esquimalt. It's a growing community. Lots and lots of reasons for that, which many of you have heard us talk about, but we're happy to share lots of data with you about Esquimalt. We're, of course, including Sherry's Langford Builder, Design Build Services. So we have Margaret at the helm, and they are going through the process right now with Esquimalt with some planning and design. Our structure, we're using the limited partnership general partnership structure. And again, we've talked about that in a lot of our past meetings. Minimum investment $50,000 and anticipated returns between 8 and 15%. So that's what we're looking at right now. We've got, again, lots of people who have invested with us on the call. So thank you for being in this relationship with us. And we're very excited about it. Sherry, do you want to add anything to this one?
No, well, I mean, just a couple of things. I think that it's important to note here that Liza, Lori, Joan, and myself are active investors. And although Joan prefers, prefers the passive side, she's brought a lot of expertise into this project for us. And we're looking for and going to continue to look for passive investors, people who are happy to be passive, that want to go on this journey with us, but they don't necessarily want to take the time and involvement and everything else to see this through. And that's what we've decided. We're willing to do it. And so we are definitely looking for the passive investor.
And we'll have more about that in the new year for sure.
Exactly. Yeah. As we get our offering memorandum, will be available in the new year. So the next slide, yeah, so is basically, just be ready to take action in 2021. It's kind of amazing. I mean, 2020 has been a very unusual year for a lot of people, but for us involved in real estate, it's been a phenomenal year. And we don't really see that changing in 2021. It was really interesting to hear the chairman of the Federal Reserve in the US has basically stated, regardless of what is going to happen, they are not going to be raising interest rates until likely 2023. So when you take wherever there's employment or people want to move to and low interest rates, it creates demand. And that's what we're experiencing in the Victoria area. So you take action, you feel comfortable, and confident in what style is going to work for you. So whether you want to be an active investor or a passive investor, just start taking action. Once you know that, learn and see more definitions and examples. You can contact us. We have a lot of data that we can give you on various things and how they've worked. And we'll be doing more education on the different kinds of investing as we go forward. So thanks for taking the time, and we're going to get to questions.
Yes, so if anybody has any questions, I could probably stop sharing the screen unless there's anybody who wanted to see any of the slides, because then we can see if anybody wants to unmute or turn your video on and say hi. So why don't I stop sharing the screen now? Okay. And we can pop in, and yes, please feel free to ask us your questions. Oh, yay, now I can see everybody.
Yeah, so I've got, there are some questions here.
Yep, awesome.
And I just sort of, I just got to scroll down to the first one. So there were some problems with getting on, but I see everybody got on, so that's good. What's your estimate on the difference of the return on investment in passive versus active investing? And I would say, in all honesty, you have to, I don't know that you can say there's a difference and active earns more money than passive or passive earns more money than active. My opinion is it's all in the deal. whether you're the active investor, what you end up with and what your goal is and what numbers work for you. And if you're a passive investor, what you feel is a reasonable return. And so I don't know, because I'm an active investor and I make really good returns on my money. And my passive investors who are passive and that's their action, they're happy with the returns they've been getting. So are they the same? Not necessarily, but as a passive investor, you can make some really good returns too. So I think it really depends on, again, the style and what else you want to do with it, as opposed to the actual, you know, am I going to make 5% more as an active investor than a passive investor or whatever? It really depends on the deal. Anybody else want to chime in on that?
Yeah, I would just chime in the factor of time too, and payment for time, right? So
Yeah,
it's not all about just what the percentage difference is or what could net you more. It's really what you have the availability to do and what that time is worth for you as well. So it's all relative to your situation.
yeah, it's true. I mean, we just had Rick and I had an interesting experience. Just we bought a property in March of 2019 and we thought we were just going to hold it. We had to put about $25,000-$30,000 into renos to make it what I thought was reasonable to put a tenant into. But we didn't want to do too much because we thought ultimately we might develop that property. But in June of this year, so we bought it in March of 2019, in June of 2020, we were approached by the city. They wanted to buy the property. So we went into discussions about what they would pay us, et cetera. And we had a tenant in there, we would have to get out and blah, blah, blah. So to make a long story very short, we actually closed. The city bought that property from us in November. We closed in November. And so when we calculated it out, we made a 495% return from March 2019 to, you know, November, the end of November 2020. That is not usual, but, you know, we'll take it. And it wasn't anything miraculous that we did. So sometimes it's just being in the right place at the right time and being willing to take action. Right. So.
Okay, great. So lots of good questions coming in. Thanks, everyone.
Yeah.
So some of them we can go through fairly quickly.
Yeah.
So can you
Tax
invest?
implications.
Yeah. So can you invest less than $50,000 as a passive investor? You can, depending on what you're investing in. So $50,000 is what we're looking for as a minimum for our current project. But there's, I mean, as a passive investor, I know, for example, some of Raintree's exempt market funds, you can get in with $5,000 and you can also use your RSP money. So there are opportunities to get in as a passive investor with as little as $5,000. So a really good way to get started.
Yeah.
That one's
There's a
pretty
question on tax implications on fix and flips.
Mm-hmm.
Is there a duration you need to hold the property for to not pay capital gains? Do you own these properties privately or in an LLC? So Lori, do you want to speak to that? I
Sure,
can
yeah.
speak to the tax stuff, but you can
Okay.
too.
So our income properties are purchased in our own name, so we don't have them in an LLC. The property we purchased on Agnes that was zoned for a duplex, that was our primary residence. So we moved in, we renovated, we spent about 3 years living there, built the second house, sold it, and paid no capital gains tax. The fix and flip we're doing right now, we have purchased this in our corporation. And this is the first property I bought through my corporation. So Sherry, I may let you then touch on that.
So just for those of you who may not know why I'm talking on the tax stuff is because before I was a realtor or in real estate, my background is accounting and taxation. And I used to do a lot of tax returns a year. So anyway, again, though, I'm not an accountant and I'm not in the tax business today, so you should check this out with an accountant. But I do know that CRA considers fix and flips to be income and not capital gains. So unless you are living in it as a principal residence for 12 months or longer, you cannot use it as a principal residence. And basically, if you're flipping a property, that profit that you make is taxed as income, not capital gains. If you are buying a property and you're renting it out or you're renovating it, but it's over a longer period of time before you sell, it can be a capital gain. But if you're doing fix and flips, they look at it as though this is your way of generating income, because some people will do 3 or 4 flips a year. That they consider that to be income, not capital gains. Does that help?
Okay.
Oh, sorry.
Yep, go ahead, Sherry.
No,
Couple of
someone
other-
else asked if you have to be accredited to get involved in these investments. Being accredited is the easiest. And so for those of you who may not know, an accredited investor is what they consider sophisticated. You have to hit a certain income level or a certain net worth level to take on the risk. And usually the investment requirement is usually a bit higher, but so accredited is easy. For us, what we have, friends and business associates have an exemption, but really you need an offering memorandum, which is what we're in the process of having done up right now, is when you have an offering memorandum and you read through that or get advice or whatever you want to do, you don't have to be an accredited investor to invest. So that's what happens with that. When is the cash out on our 20 unit that we're doing? Is probably 3 years. We say in the offering memorandum it's going to be 3 to 5 because you never know what's going to happen in the market. We don't want to get caught, but our projection is within 3 years.
And we bought that in July.
For, just to follow up on that, the objective of this investment will be to sell that building when it is finished. Yeah.
And Sherry, we bought it in July. So would you say we're into our 3 years?
Yes, we're
Yeah.
started into our 3 years already.
We're halfway through our first year already.
I know,
Hard
it's
to
crazy.
believe. Yeah.
Well,
crazy.
technically though, just to be clear, we didn't close on the property until September.
That's right. Yes, it feels like it was a long
Yeah.
time ago, but
So-
yeah.
So that's when the clock starts ticking.
Mhm.
September 4th. It was a crazy
So
day.
some great questions. How is the rental market in Victoria at the moment? Hey, Sarah, long time no see. Lots of people I haven't seen in a while. This is great. Sherry, do you want to take that? How is the rental
Well, you know,
market in Victoria?
our vacancy rate is creeping up. I think we're at 0.7.
Ooh, almost a full percentage point.
And I think depending on what area you look at, I think there might be some numbers that are out there that'll say maybe Greater Victoria all average together we're 1.2. But we're not higher than that. The demand is so great here. And it's only escalating. And I think a lot of that has to do with we have a shortage of housing. And so construction is booming, and construction did not stop here during the COVID shutdown. It continued. We have people who want to live here because if you are going to be shut down, they're looking for nicer weather. A lot of the snowbirds who went south usually in the winter are now coming here. So anybody that's got short-term rental, anything on the island here, if you try to find it, it is booked. Like it's hard to find anything. Like even Tofino at $600 a night is booked through to like the end of February. It's crazy.
You can't park an RV anywhere on the island right now.
Yeah.
They're all booked. Every RV site on the island is completely overwhelmed.
Yeah.
And I think one thing too to keep in mind, I'm sure everybody's heard this in the news, but Canada is expecting 1.2 million immigrants in the next 4 years. And, 400,000 people a year moving into the country, and they're going to be moving across the whole country. They're not all just going to land in one place. So it'll be exciting to have lots more people arriving onto our shores and being involved in building housing for all kinds of people.
Yeah. So are you saying even a fix and flip and a corp is income versus capital gain? You betcha. It's the business of the corp. Yeah. What determines the rate of return for the passive investor in the Esquimalt project? The rate of return will be determined by how quickly it sells, what the market does, where the cap rate we sell at. So it's going to be the profit between what it's cost us to build it and what it's cost, what we get for a sale price. So that's a big thing. The other thing will be how long it takes to sell. So we're going to have it leased up and it's going to be earning rent. But I have to be honest with you. Yes, we will be paying out rental income, a percentage of that, every 6 months while we have it. But it's not that rate of return is not going to be huge because, of course, it takes a few months to stabilize the rents in a new building. Your expenses initially are a little bit higher. We, the four of us, when I say we, are not taking any fees. We don't take any money out of this project until the end after our investors have been paid out. So we're not taking anything off the top, but those are the elements that determine what the rate of return is going to be, is what the money is at the end when everything is said and done.
And we do
our
have
investors are participating or sharing in 40% of the net proceeds.
And we do have some presentations on that, and we'll be doing a new one in the new year when we have our offering memorandum. So if you
Correct.
are interested, just let us know, and we'll of course keep you apprised and let you know when we're going to be talking about that.
Yes.
A couple other good questions. Does an investor need to be a Canadian resident? So
basically, yes, in a nutshell, or they can be foreign, but they need to then incorporate a BC corporation or something to funnel the investment through.
will there be a preferred return for investors on the Esquimalt project?
No, not really. It's when all the numbers are said and done, our investors together participate in 40%, whatever that number is. So I wouldn't call that a preferred rate of return. What is preferred is that you are high on the list. In other words, after expenses are paid and the bills are all paid, you are first to get paid out before anybody else or anything else. So, well, no, so expenses, and in that would be a mortgage, the construction loan.
And a couple other things too there, Sherry, is we decided to go with a 60-40 split, which we've been told is quite generous. So the portion of the profit that we're sharing on this first project is pretty good. So that means for potentially more money. And our investor pool is quite small, right? We're keeping it fairly small.
Yeah, we're not doing
one.
a large offering.
Yeah, so it's nice and small, so it's not spread out too thin.
Mm-hmm.
How much more capital are we raising for this particular project?
Yeah, probably about 1.6, 1.5.
Is that additional?
Yeah.
Yeah, that's.
I would say we're probably, it's probably less than that, but actually, what am I talking about?
I was going to say, isn't it?
Sorry, it's about 1.3. Yeah. 1.2, 1.3. I was wrong.
That's okay.
We need to get up to date on what's our numbers. Yeah.
And you've got so many things going on too. It's always, which one am I talking about?
Which project am I talking about? So I have to have my cheat sheet of my numbers.
Exactly. Yeah. So I'm just going to run through the questions here. If anybody wants to unmute and chime in while we're running through these questions, feel free. It's 7:29, so we're happy to stay on for a few minutes longer and answer questions. But if anybody needs to run, of course, we're not going to be offended or upset if you've got to say bye-bye for now. We'll keep you posted on what's coming up. So let me just go through. I'll have a look and see if I've missed any of your questions. I think we've got most of them.
Yeah, we got them.
Okay. Yeah, so it looks like I haven't missed any. So yeah, just to reiterate about Raintree, we're asking about Raintree. So Raintree Financial Solutions, Lynn Trevison is the private wealth advisor that a lot of the WREN ladies, a lot of the WREN members, ladies and gentlemen, deal with. They have an office in Victoria, Vancouver. They've got a main office in Calgary. I personally really like them because their investment standards just are really ethical. And they do have a lot of great exempt market opportunities that you can get involved in. Centurion comes up with them quite often, and Joan and Sherry have both been involved with Centurion. Storage is a big thing now, and they've got a new storage offering that's available. So they've got lots of good offerings through Raintree, and I can put you in touch. So just reach out to me, and I can put you in touch with Lynn.
Mhm.
And
There was a comment.
yeah.
Sorry, there was one comment that got missed, which was someone mentioned that when your money is in the bank, you should be aware of the service fees. And I would have to say that it's not just the banks. It's like any private equity or passive, you really need to see what is the fee structure, because sometimes there's a lot of fees that go out the window off the top. And then there has to, be a rate of return, or they're paying commissions or finder's fees, or, all sorts of stuff. So you really need to be aware of what the fee structure is, both at the bank or on any investment. It should be part of your due diligence.
For sure. And I will just speak from the private equity that I have. You can usually only book that through very specific banks that will hold those accounts, and they make you pay dearly for the charges to hold those accounts. So like Olympia Trust, for example, in Alberta is one of them, and you pay hefty fees for having those accounts for each of your private equity funds.
Mm-hmm. Yeah. So we dearly love to be able to talk to you about what we're doing, because we are looking for passive investors, but we also recognize that we aren't the investment for everyone, and we are here to help people reach their goals the way that, in ways that we can. And whether that's just having coffee or whatever, we're always open to have conversations. I love to talk about real estate. You do it all day long. I do it all day long.
I was gonna say, you do, Sherry.
I do.
All day and all night and all weekend.
Sometimes that's true. So anyway, so we're happy to talk with anyone, and certainly happy if someone feels that we're the right group to invest in. That's great for us too.
Yeah, that sounds awesome. I think 7:32, it looks like we've answered. Oh, we've got a couple more questions coming up. Are dividends paid annually, quarterly, or otherwise? So if that's regarding our investment, it'll be paid out at the end of the investment when we sell.
Right. With the exception of the rental, our rental will be paid out every 6 months. Yeah. So
excellent.
Portion of the rental will be 6 months. Yeah.
Fantastic. So hopefully everybody knows how to reach us. If you don't, the information, best way to find us, I mean, everybody's on social media now. As I mentioned, we'll have the website up. It's actually up now.
It comes out reversed. Doesn't work.
Sherry's holding her business card up. Most of you are familiar with the WREN account, so it's pretty easy to reach me, Liza@ren.club. That's WREN.CLUB. Lori and Joan are just getting their new Crown Capital business cards printed up. They look great. And we're really excited to move into 2021. We think it's going to be an amazing year and full of opportunity. And we're hoping that those of you who haven't taken action yet see it as a good year to take action. You know who I'm talking to.
There's one last question I have to answer.
Yeah, go for it.
I have a hard time shutting up. Okay, so last question. Where do you see the market for 2020 or 2021? So while 2020 was phenomenal, actually, and 2021 does not look at this point in time of slowing down. And everybody, with COVID was going, oh, the prices will drop. We're going to see a lot of drops. As long as our demand is where it is, it's not going to happen. We had the busiest, November was the busiest month for closings. Lawyers and notaries were bizarre. It was the busiest month of the year. We have people who are closing in December and January who can't get a lawyer that's got space. Like a lawyer and notary's offices are fully booked. It's crazy. Like that's how much activity is out there. So, do I see prices skyrocketing? No. We may see our market increase, maybe 3-5%. And if we're lucky, it might be 10. It depends on the demand. You know, multiple offers do tend to drive our market, right? And as long as the demand is there, we're good. The unusual thing that's happening is, and it's happening in the States too. I was listening to predictions for the US and Canada, and they were very similar on what we're all as realtors seeing is decentralization. People are now moving out of the cities and into the suburbs. And if they can work remotely, they're moving at least 2 hours out of the city. So they're wanting their space, they're wanting their distance. It's cheaper 2 hours out of the city than in the city. Victoria is a small city, so we're getting a lot of that from the larger cities are coming here. You know, like Vancouver is a huge influx, and Ontario now as well. So we're seeing that decentralization, and we're seeing a lot of upsizing, which is the surprise for everyone. Because up until 2020, it was all about downsizing and people buying smaller places and minimalists wanting smaller places. Well, guess what? COVID hit and people realized, oh, I can work from home. I like working from home, but I need more space, because now instead of maybe needing all of this open concept, we want rooms that we can close a door. So he has an office, she has an office. There's a school room with a door, like they need doors. And so the open concept now is changing how builders are looking at space right now. Bizarre, but happening. Because people need and want more space so that they can still do everything in their house. And so people are upsizing. People are realizing if they had, you know, older parents that, oh, if they were in this situation again, or they don't want to send them to an old folks home because of what's been happening in the seniors arena, they're buying places where they can now live intergenerationally in case this goes on or it happens. But I'm not putting mom in a, you know, in a long-term care facility right now. So those kinds of trends we're seeing, and I don't think they'll change throughout 2021. And now with interest rates going to be remaining low, I just don't see that the market's going to tank in any way, shape, or form here. The larger markets like Toronto and Vancouver can afford to take a little bit of a drop, and they'll see more people moving out of their centers. But in Victoria, it's very unlikely. And we're the place people want to be. We're the warmest place in Canada. Like if you're going to be stuck in the country, where do you want to be? Not
and we did,
Toronto.
just to add to that quickly, we did a market update. Was that last week or a couple weeks ago? We had some of our colleagues on from coast to coast. Darlene was talking to us about Moncton, BC, or Moncton, New Brunswick. And Moncton was selling for the first time in their history, prices over asking. And people from Ontario were buying houses in Moncton sight unseen. So multiple offers, over asking, sight unseen, phenomenon that they have never experienced before. And one of the things to remember, you know, COVID-19, Canada's one of the safest places. We've just been declared one of the top, the #1 place to live in the world again. And so people are going to be wanting to move here. So
yeah,
we're not going to see anything different, I think, anytime soon.
And someone was commenting about supply. Well, of course, supply and demand. I mean, it's the fundamental that pushes everything, and it'll push prices. So our 10-year average for listings has usually been around the 4,000 mark. And do you know where we were at the end of November? We were below 1,900, less than half. And we were lower than where we were easily a year ago, 2 years ago. It's like, wow, we have very, very low inventory. So if you are thinking of selling, now might be the time to do it, you know? So, because you can certainly sell. The trick is always where you're going to go and what do you want to do? And if you don't know the answer to that question, you may not want to sell, right? So, but yeah, supply and demand, is everything. And our demand is so strong and we're not seeing it. There's no indicators that are going to drop off that show us that it's going to drop off.
Okay, great
Mhm.
questions, everybody. It's awesome when
Yeah.
there's so much good interaction and so many great questions. We had at one point, I think we had about 35 people on the call tonight. So it's awesome to see everybody coming out this close to Christmas. You know, usually by now we'd be having a Christmas party and we'd be having wine together and we'd be asking, you know, hey, yes, exactly, Sydney. Yeah, I was drinking tea tonight. I was going to drink wine and I ended up with tea. But yes, a huge thank
bubbly.
you. Huge thank you to everyone for taking the time to join us and for participating and your questions. Stand by for the website. We'll have newsletters. We'll have the Facebook page. We're on LinkedIn. You'll start seeing us everywhere. Hopefully you don't get tired of us. You know how to find us, and lots more coming up. So let's make 2021 the year that we, if we haven't taken action yet, the year to take action. And if you have, you know, maybe it's the time to switch things up a little bit or expand your network, learn something new, try something different. And part of the fun is doing this together and being collaborative. And we're really excited about helping to build some of the housing that's missing in our community. And so we're all going to go out there and build some houses for either the people who are moving to Victoria, Vancouver, or Toronto, or the immigrants that are coming in from other places, and be part of the solution. So that's all I got. If anybody wants to say anything else, Lori?
Yeah, just thanks for your time tonight, everybody. And we really look forward to meeting you in person next year. Next year. Excited about that. Thank you all.
Okay. Special shout out to my brother online. He's still there.
And it was
Talk to
so
you
nice
soon.
to see so many people I hadn't seen for a while. Allison, Rosie's there, and yeah, Tracy and Sarah. Hi, Sarah. So great to see Sarah. And yeah, it's been
Yeah, there's
fantastic.
lots of people.
Donna, great questions. So I'm looking forward to connecting with you and answering your questions for you and putting you in touch with Lynn. And Maggie, great to see you. And Judith and Paul were here. So yeah, fabulous. And Joan, were you going to say something?
No, I'm good. I'm just
You're
thrilled.
done. You had a busy day.
I did, yeah.
Yeah, exactly. Yeah, Joan's been on the news recently.
Couple of different stations last night. Yeah.
Exactly. So there we go. All right, everybody. Thanks very much. We'll say goodbye and we'll see you next time. Bye.
Take care. Good night.
Good night.